Hey everybody, welcome back to Stock Ventures. Today we're going to be talking about the different types of investing strategies. There are many types of investing strategies, and it's common to find stocks that fall in between these different strategies. The goal of this video is for you to find the strategy that works best for you, and if you like one strategy and you like a different strategy, it's okay to put them together, because as long as you produce good results, then it's perfectly fine for you. Alrighty, so the first type of investing strategy that we will talk about today is called value investing. This is basically you're looking for a stock that you think is undervalued but will become valuable in the future. These are solid stocks that you've researched and understand that they will be good long term. These are usually less risky stocks like Walmart, for example, Disney as well, and they usually provide an 8 to 10% return on their stocks yearly. These are great stocks because they're less volatile, meaning they don't go up and down. So this is a really cool strategy, very safe for the more scared investors who don't want to lose a lot of money. I know nobody wants to lose a lot of money, but there's a lot of money to be made in the stock market. Another strategy is called growth investing. This is exciting, but risky. You can potentially make 100% returns, even 200%, even 300% returns on your initial investment, but you could also get zero. So you have to be careful. Some examples of this are Amazon, Microsoft, Tesla, or any electric vehicle company that you can find right now. They're pretty crazy, but the return potential is unlimited. And the reason why I say you could do really well on these is because if you have a plan for entry and exit into these stocks, you can do very, very well. Most of these stocks are exploding. Just like Tesla, it's gone up over 700%. It's a really great growth stock to get into as long as you have a plan. Alright, so the next type of investing that we're going to talk about today is called dividend investing. This is a strategy that focuses on making the most in dividends. Dividends are a small amount of money that a company will pay you for holding shares of their company. Some examples of this are Coca-Cola, Pepsi, IBM, or Disney. Basically, look up companies on Google, see if they offer dividends, and it will show you how much they pay and how many times they pay that year. This strategy is focused mainly on making money off of dividends. So if you have a big company that offers a lot of money in dividends, go ahead and do this strategy. You'll make most of your money off of the dividends, not so much growth like the other stocks, but let's say you get $1,000 in dividends every year from just holding stocks. This is a really great strategy. You just make a lot of money over time. And the bad thing about this type of investing is you need a lot of money before you can start getting $1,000 in dividends. So keep that in mind. So the next thing that we're going to talk about today is called short-term investing. This type of investing involves day trading. This is when you buy and sell a stock on the same day that you bought it. This results in one day trade, and keep in mind that you only have 3 day trades for every 5 trading days. So this is not a good option for beginners because beginners cannot make more than 3 day trades, and it's very, very complex, the strategies that you need for day trading. And to get unlimited day trades, you need to have at least 25,000 to begin day trading unlimitedly. But day trading is very, very risky. If you don't know what you're doing, you can lose a lot of money. So I don't recommend it for beginners. The next thing that is involved in short-term investing is called swing trading. This is buying and selling a stock a couple days after the original purchase day. So let's say you bought it on Monday and you sold it on Thursday. This is called a swing trade. You usually do this basically when you buy a stock and you think it's going to rise in the short term, and then you sell it when you start to make enough profit that you think, oh, okay, this is enough. This is usually when like big events happen. For example, NEO Day for that certain stock on January. It's gonna have like an important announcement, so you can buy the stock now, and the days before the announcement is set to be released to the public, usually stocks like that go up on hype news like that. What people do is they buy the stock earlier so that they can sell it either the day of or a day before, just to keep all the profit, because sometimes what happens is after news a stock price can fall down, maybe like a couple bucks, but hey, you made some profit. Short-term investing can make you a lot of money, but you'll also be taxed at a higher rate than long-term investing. In long-term investing, this strategy is basically you keep the stock for more than a year and they tax you at a lower rate, which is something like 0 to 15%. And this is great if you're young and you have time to hold stocks for at least 5 to 10 years, if not longer. The results of long-term investing may vary depending on which company you decided to hold for a long time. You can hold a stock for years and it might not do well. So this is why I always tell people to research the stock and make sure that this is a stock that you believe will grow in 5 to 10 years, because if it does grow in those 5 to 10 years, you're going to make a good amount of profit. In conclusion, you do not have to specifically stay in one category or another. You can mix and match stocks for either section. Just make sure you have a plan and do your research. Some stocks may look good long term, and then something crazy happens, like the CEO dies or something happens in the company, so you have to make sure to have a good entry and exit plan. If you're interested in starting your investing journey, make sure to download the Robinhood app with the link I leave below and sign up for 1 free stock. Alrighty guys, that's all I have for you guys today. Have a great stock venture.